I went short basically on my evil due to SMT, but we have to see if we can trade lower from here. Would like that we basically resweep the low, because to me that's engineered liquidity, but we have to see. We still are within our 10 macro, so, and I really like actually the SMT being in play right here. I like that the body stopped at constant encroachment. I'd like to see that we use the inversion fair gap right here as or the bullish fair gap as inversion fair gap. Closed right here. Yeah, I think. Okay, now we created SMT. Maybe I will re-enter, but I think it's basically looking way too bullish. Yeah, really annoyed. I could not take this trade with Tradovate. Could have made money already. In that case, I'm actually still quite confident about the target that we have only engineered liquidity right here. But in that case, we already swapped daily buys liquidity twice, so therefore, yeah, a bit more difficult. Probably last attempt going short. Like the delivery so far to the downside. Still aiming basically for the engineered sales liquidity right here in advance of the low of the high time frame gap. Expecting also that we will still close to the downside on the hourly. 15-minute right here inefficient. 5-minute right here inefficient. So yeah, there are some reasons that we could draw low resistance liquidity right here basically. Like to see that we use the up close candle right here as a order block, so as resistance higher. Engineered sales liquidity. 5-minute looking heavy, more heavy than a 1-minute. So to me that looks really heavy on the 5-minute. Yeah, I like that. Once you see that we speak the sales liquidity right here, right into basically the inefficient gap right here. That's what I'm looking at. So only retracement to the upside, no market maker buy model in here in play. Even if we swapped triple daily sales liquidity, we are really heavy. We respected the consequent encroachment level of the first fair gap. We had a really clean inversion fair gap right here. We swapped buys liquidity, and now I'm basically looking once more for the just there's a liquidity curve of the market maker model. So lower time frame market maker buy model followed by basically a lower time frame market maker sell model, which can basically target external liquidity because we are in aligned with the higher time frame. So therefore we expect that we trade back to external liquidity right here. The market maker buy model on the lower time frame only managed to basically sweep internal buy side liquidity and trade back into a internal PD array, respected it, and then we are now basically within the right side of the market maker buy model and therefore market maker sell model, sorry guys, and therefore expect that we will reach external sales liquidity. So that's our draw. I will now lower my risk above the level right here, the lower quadrant. So I really like the delivery, that we stay heavy on the 5-minute as well. Yeah, now we just have to see how we deliver to the downside. Maybe we'll also mark out basically the 5-minute quadrants right here. Still like the delivery. I like that we traded up into the inversion fair gap right here and use it as resistance higher and support basically lower. So now we have to see how we trade basically within the quadrants level of the 5-minute inefficient wick. And now we have to be a bit more careful. Definitely would like to see that we just dump through it and trade back to the external liquidity draw. If we trade a retracement, we would definitely target only the quadrants. In that case, because we are in a market maker sell model, which is aligned with the higher time frame, I would like to see that we reach external liquidity and not basically retrace back from here. Still, we have to be a bit more careful. Also, take a look on yes, but yes is also like still looking more bearish. So we keep on holding. And we see some reaction in here. So at least I want to see that we trade back to CE. That's the minimum target actually. And we did not reach any specific time, so only at maybe 10:45 I get more cautious, because then we reach the London close macro where we could eventually retrace back. So because we have mostly done damage to the SS, like we could expect a retracement within the London close macro. Therefore we should be out basically with 10:45. Would be ideal in that case. Would have liked a close below the level. Yeah, really heavy. Looks like we will draw back to the engineered size liquidity. Whoa. Oh my god, really retrace back heavily. Damn, I did not expect something like that. Wow, that's insane. So break even day. We traded back to the CE level, respected the upper quadrant, and then just took off. Yeah, it's really difficult to trade with only one contract, but we have such a fucking high volatility. I can't take more risk, and I'm only trading with, or I'm only able to basically be 1,000 bucks in drawdown, so I don't really have the chance to take more risk. I'm basically trading on hardcore mode. It's literally insane. So taking partials in here, it would be so fucking easy to be profitable. So just taking one off right here would be basically yeah, would be really important. Also right here, I traded, as you saw before on paper trading, a trade right here, and I'm obviously should have taken something off in here, but with only one contract it's really difficult. And now we had really insane delivery. I don't know where basically the candle came from, so what the fuck was that? With no news actually, so insane. Maybe I was a bit too greedy, so I could have, so like, if we are in trading conditions and trading aligned with the higher time frame and we are trading a market maker model, then sometimes, because we are still basically not really traded, or we are still in not close proximity to our opening prices, but we are not really traded far away from them. So we did not have really expended so much on the daily chart already. As you can see right here, yeah, definitely traded lower, but if you compare the last trading days, we had a definitely more volatile close. So the body was way larger, basically the last whole 2 weeks basically. So today a bit more smaller. And therefore, I would have really liked that we eventually just drop aggressively through the level right here and expand a bit more lower. But yeah, once again, with only one contract, it's trading on hardcore. I could have just closed right here at the CE level, then would have been, I think, 150, something like that in profit for today. I would have been already up on the day if I could have traded just right here with Tradovate, but Tradovate was not able to manage that today. Really annoying. Took one loss right here. Really like the fact that I closed my market right here. Analyzed correct that we have high resistance lower. We are not within the right time, so we need 10:30. 10:30 approached. We entered right here, went short, and basically exited right here after we just yeah, I don't know what we did there. I really fell short of it right here, and it's really difficult because we really at one candle we just we traded through all the down close candles right here, so there was not really an indication that we would reverse in here. Really happened really quick, so very difficult in that case. If we can close below the up close candle, maybe I will then short once more. Fuck it. If the SMT right here could stay intact, it would be perfect. Nice, I like this delivery right here. So that's what I'm talking about. Aggressive delivery to the downside. That's what we want to see in that case. I'd like to see that we stay heavy. The fact that we came really close to the engineered liquidity right here, I'm expecting that we will seek it, just because we came really close proximity to it. I'd like to see that we maybe even just dump through it and trade into the quadrants right here. Would be really nice. Yeah. Thank you, really playing with us today. Insane. Now we see if we can stay heavy. That's what I wanted to see in the first place right here. And we see how we deliver in here, basically. I like that. If we can close below CE, that would be perfect. We have 2 minutes left before the 5-minute candle closes. I've been closing with the new candle approaching. To see. Okay, still like that. Can reach maybe for the lower quadrant. Oh. Out right here. To me, that's enough. Oh gosh. Really emotional trading today, I would say. Not emotional, so really stick to my trading approach. I did not really something wrong, so I did not over leverage in any case. You could argue that I maybe over traded in here, but the fact that we actually reached our targets, I knew basically that this right here is only engineered sales liquidity. Stopping right here in advance of the low of the high time frame gap with such a huge wick to the downside. With the fact that the 50-minute candle right here has a huge wick to the downside indicates that we are still bearish. We are probably still eventually expanding to the downside, but because the long close macro, so we have now basically after 11, we have lots of inefficient displacement to the downside. Therefore, I don't want to be really long part of the move in here. That's basically the one more leg to the downside I was expecting. This right here would have been already my really quality trade. I traded this on paper because, as I already mentioned 3 times or something, probably you're not, already annoyed by that, but yeah, could only trade paper in here. Tradovate was not available and was holding a bit too optimistic. So we swapped daily sales liquidity twice, and then I got stopped, I think, above the wick right here. But I was still expecting more bearishness, just because the higher time frame was still not really expanding to the downside. And as I already mentioned as well, the 50-minute inefficient wick, also the 5-minute inefficient wick, was really telling me that we will, yeah, just retrade to the levels right here. Went short, because we also do had a SMT being in play right here. Already with the 2 wicks right here, we had SMT. Now I have to really refine my SMTs. I really like the SMT right here. I hope this stays a bit longer on. I think we also did have SMT in here, but I don't. Yeah. So right here we had SMT, and that's really, the SMT is like the perfect indication for a continuation setup. So in that case, if we want to see that our market maker sell model basically begins in here, because we are trading a line, we are basically trading a higher time frame market maker sell model, and within the higher time frame market maker sell model, we want to trade the lower time frame market maker sell model. Basically the expansion to the downside, targeting external liquidity draws. We don't want to take any longs in here, because the longs, if we would have gone long in here, we would not be able to target external liquidity. Right here you can see we formed SMT, and therefore we can only seek internal buy-sell liquidity, and we respect internal bearish PD arrays. Respecting CE right here perfectly. Perfect short, perfect short in that case. First stage of distribution in my opinion. Right here with basically the, yeah, also the perfect, yeah, retracement and then continuation to the downside. Really clean. A bit unfortunate that we have, yeah, really high volatile trading conditions. Therefore, I'm not really able to scale out nicely out of my position. Therefore, this huge up close candle just stopped me, or basically I executed by market. I was because if we trade a lower time frame market maker sell model aligned with the higher time frame, then we want to trade back to external liquidity. Therefore, actually, we don't want to close our position within 5-minute quadrants right here, yes, but not within internal targets. So we want to target external liquidity. Still, yeah, basically that's right here manipulation before the London close macro, because we are only to reach lower with the London close macro. Once again, swept nice liquidity, but still respecting the high time frame gap right here. As you can see, perfect bodies align with the high time frame. Traded also perfectly to the first FVG gap right here, traded lower. SMT in play, perfect short. Really high resistance in here due to the quadrants levels, and then we had a really clean SMT in here, so that indicates that we will now still trade lower. I can trade my stop above the swing high right here, so that's our invalidation point. And then with approaching 11, we will see one more leg to the downside, and now I don't know, maybe we will see one more leg to the downside, maybe we will retrace and high resistance. I don't want to be part of that. I'm really done trading today. So today was really insane trading day. 162 US dollar. I'm really happy with that. So yeah, definitely an emotional trading day, but I mean, I took a really clean trading trade right here, and then I could not trade it on Tradovate, and then I got stopped, and then I was down on a day, and still it looked really clean that we would eventually trade and expand lower. So I just had a really strong conviction, and in that case, I now already also do have lots of experience, I have to admit, because I'm just looking at these charts every single day, and yeah. What I was targeting right here, I did not mention so far, is actually the 4-hour inefficient wick right here. So eventually we can maybe even seek the sales liquidity right here and trade back to the higher time frame gap. That's what I would prefer to see. But yeah, we don't want to be part of that with only one contract. Now, once again, if we would trade one partial right here, stop basically above the upper quadrant, and then we would just aim for the low of the 4 wick or for the higher time frame gap. So yeah, would be way more nicely to scale out. But we also do have a huge higher time frame SMT being in play right here already, so we could expect some yeah, lower time frame retracement. And I think that's basically it. So I already did my breakdown before. But maybe let's drop once more to the daily chart. So now you see what I mean. That's what I'm talking about. So I was already, or before I was explaining that I want to see a more aggressive expansion on the daily chart. So that's what we are trading. That's power 3. So we want to trade the expansion basically aligned with the higher time frame on the lower time frame, basically. So we are executing on the lower time frame, but we are expecting the expansion on the higher time frame. Actually, the 4-hour wick is aligned with the daily wick right here. That's nice to see. And yeah, so now we basically got our expansion to the downside. We also traded back to the yeah, it's an hourly chart, to the hourly wick right here, and traded below it. And yeah, I think that's basically it. So now we traded back to the lower quadrant. Really clean. I think I will pause my recording right here and then just show you how it will look like, basically the chart within a few more minutes. But yeah, or I really don't know how long this video will go, but I think I will definitely yeah, I've really basically learned a lot today. Today was an insane day, and my hair looks like garbage. Really fried right now. I don't know. Yeah, we managed to be up on the day. That's what we want to be. And whoa, actually, right here you can see we are already retracing. So that's what I'm talking about. Yeah, we really have to be more careful if we approach the daily quadrants, also 4-hour quadrants. So I'm really content with my exit right here. Definitely with more contracts. Yeah, it's more easily. And yeah, that's the business. $162 for today. I'm now basically up 1,000 on my evaluation account. Really exciting. Yeah, it's a really emotional to me right now trading, I have to admit, because I don't really, so I only trade I think for a few weeks on a eval account, so it's definitely a bit more emotional than trading a paper trading account, because you just know in the back of your mind, yeah, it's just not really money. It's definitely a bit more different, emotional. And also like the volatility that we have is so insane. So we have really insane volatility. Yeah, it's definitely due to the fact that we expand on the daily chart. We really like, so then we are also able to catch, yeah, really clean low resistance liquidity runs, but in that case our stop is really high, or yeah, just contains, I think you can say that, lots of handles, so relatively high risk. Yeah, but I'm really proud of my trading approach. I really like it. Yeah, that's basically it. So I think you now saw how we play out. I just wanted to see if we like really break to the downside, or if we have a lower time frame retracement, and we did had a lower time frame retracement. But still, I will pause the recording, and then yeah, you will see how it will look like basically in some minutes. So see you soon. Hey guys, so I'm back, and as you can see right here, we did actually expand it lower into the higher time frame gap. We basically expected that. So yeah, really clean to see, really amazing, a really clean delivering day today. Definitely had some high resistance basically within the quadrants of the daily wick in here. But yeah, I really like that we were able to expand lower. And actually what I also find quite interesting is the fact that yeah, just with lunch we basically still expanded lower. SMT in play, perfect institutional order flow entry drill right here. And from there on we basically just sold off breakaway gap right here at consequent encroachment and still expanded lower. And yeah, just a really clean delivering day. I'm really happy with basically today's trading day, with how I approached the market. I think I definitely had a relatively low risk today, so managed basically my position quite well. Could have definitely managed the first trade a bit differently, so to get stopped, I think above the wick right here is yeah, just too late in the move. So yeah, definitely difficult with only one contract, but we have to trail our stop then if we don't close right here more aggressively. The short right here is okay, but in that case it's not the right time, so we have to really wait for a yeah, lower time frame retracement. So market maker buy model on the lower time frame SMT with ES, we don't expect that we will reach. For external liquidity, we basically respect still the internal PD arrays, the bearish PD arrays, we respect it perfectly at consequent encroachment right here, traded lower, inverse the gap right here, approaching 1030, I went short, perfect respection basically, or perfectly respected the inversion failure gap, traded lower. Unfortunately, we had a really strong bullish retracement from here. We could have already closed within the quadrants of the 5-minute wick. I marked out right here. But because we basically are trading the market maker sell model within a higher time frame market maker sell model, we don't want to take or close our position within internal targets. We want to reach for external sales liquidity. So therefore, I don't want to close in here. Yeah, once again, with only trading one contract, it's definitely way more difficult. So we could have just partialed in here and then hold it, but yeah, with one contract, way more difficult. Still, I'm really had the strong conviction that we will expand lower, definitely because the hourly and the daily chart, we are not really expanding or not overextended, not really the expansion we wanted to see on the higher time frame. We are still in relatively close proximity to the opening prices, so we still expect a one more leg basically to the downside, one more move to the downside. I entered right here, SMT in play, what confirmed basically my lower time frame smart money reversal, stop above the invalidation point. we approached the London close macro. From there on, we kind of had high resistance in here. Then we had SMT as well right here at the wicks, what we really want to see. Then we can trail our stop above the swing high right here. That's now our new invalidation point. Still traded lower, and then we finally reached even the external sell liquidity. Also traded into the quadrant levels of the 4-hour or daily wick, and I closed right here at consequent encroachment. I'm really content with that, because with being basically, or we had really a low resistance displacement in here, and also a really inefficient displacement within the London close macro. And because we are now after 11, we can expect high resistance. We can expect a lower time frame retracement still. Then we approach basically lunch and finally reached our really external target for the daily chart, the higher time frame gap. And yeah, just a still once again really clean delivering day. I expect that the short-term high basically is in play right here with the SMT, because we just had a really strong, really strong reaction from here. So sold off, and if we can now basically stay bearish below the low right here, then I will expect that we reach even for the relatively equal lows right here. Eventually reach for the higher time frame gap right here, and even into the higher time frame gap right here. So expecting a more bearish bias on the daily chart. That's basically it. Maybe one last look on regular trading hours, because that's always a really important approach in my trading style. So today we had a new opening range gap to the downside of 59 handles. Therefore, we actually expect that we will reach back to the consequent encroachment level. We definitely failed to do that today. Still, we don't want to take any longs in here, because the higher time frame bias is just overall very bearish. So we either don't trade at all, or we take shorts. We don't want to trade basically any longs in here aligned with regular trading hours. We have to accept the fact that we are definitely bearish, and we had lots of SMT in play. So ES basically traded into the new opening range gap right here. Also swapped the 9:30 opening. So right here, you can see that. Wait a second, I will show you on ES. Right here, so 9:30 opening, SMT in play. ES traded higher, and also respected the consequent encroachment level of a higher time frame gap. And if we trade now, or basically go back now to our regular trading hours chart, with the SMT in play, we basically traded back to our CE level. That's what we want to see, that we reach for, and then we are able to basically sell off. I took one trade right here, basically on paper. That's why it's not shown as a execution mark. We had the first FVG gap basically marked out. I want to see that we use it as resistance higher. We use it here perfectly as support, so really respected the level. And therefore I went short right here. And now we basically talked already about the executions. So yeah, that's today's trading day. I hope you learned something. I hope you enjoyed it. And yeah, I'm really content with today's trading day, I have to admit. So really glad. I can't really remember how you pronounce it, but yeah, that's basically it. Content with today's trading day, and see you soon.